Hi, and welcome to the second video for Chapter 2. If you haven't already watched the video about Chapter 2 vocabulary, please go back and do that before you watch this video. I'm going to start by just showing you a screen that should look kind of familiar. This is from Chapter 1, and I'm just going to review how we did things in Chapter 1 back when life was easy. It's about to get a little bit more complicated. But in Chapter 1, anytime we had a transaction that changed accounts, we expressed the change with a plus or a minus. So in this example, this slide I have pulled up, our transaction was that we received cash from the owner as an investment for $5,000. And so if you remember, we would have to figure out which way did our cash go. Did it increase? Did it decrease? And we would express the increase or decrease as a plus or a minus. In this example, cash went up, so we put a little plus. Our owner's equity also went up, so we put a little plus. As we get into Chapter 2, we're going to stop expressing increases and decreases with pluses and minuses, and instead, we're going to express them as debits and credits. So I'm going to do a quick switch over to Chapter 2. I'm a little bit lost. Okay. So here is our accounting equation. Assets equals liabilities plus owner's equity. That should be really familiar by now. We have a left side and a right side of the equation, and we're just going to make a giant T out of the accounting equation. Debits on the left, credits on the right. Hopefully you have that stuck in your head by now. Always remember, always, it never changes. Debits are on the left, credits are on the right, and a T account just separates the two. So it's just a vertical line and a longer horizontal line. It looks like a T. That's why we call it a T account. And the T account just helps us to analyze our debits and credits. So some accounts increase with debits and some accounts increase with credits. So instead of pluses and minuses, we're going to be putting amounts on either the debit or the credit side. And this is a challenge at first. I want you to just be patient with yourself. It's just about memorizing and getting used to hearing debits and credits. So first of all, let's look at the asset side of our accounting equation. All assets increase with debits. So they have a normal balance that's always on the debit side. So one of our assets that we use a lot is cash. For example, if we had any cash at all in our business, we would be expressing it on the debit side. So our balance of cash would show on the debit side. If we ever had a credit balance of cash, that wouldn't be good. That would mean our business was in the hole. So anytime we get some cash, we're going to write it in the debit side. Anytime we spend some cash, we write it as a credit. But always, if we have any cash at all, that balance will be expressed on the debit side of the T. So any asset, supplies, accounts receivable, prepaid insurance, cash, all have a debit normal balance. They grow with debits, they decrease with credits. Let's look at our liabilities. And remember, a liability is anytime we owe somebody else some money. Liabilities are just the flip-flop of assets. So anytime we have a liability or we get more liabilities, those are always growing as credits. So with liabilities, our normal balance is always on the credit side. So if I owe you some money, instead of recording it as a little plus 500 or whatever amount I owe you, I'm going to just record 500 on the right side of the T account. I record it as a credit. My liability is growing with credits. If I pay off some of what I owe you, I record that amount as a debit. And again, just be patient with your brain. It's going to take a couple of weeks for this to really click for you. Next, we have our owner's capital account. And remember, the capital account is our equity that our owner owns in the business. So any investments or sales, anything that the owner actually owns in the business is our capital account. Capital accounts increase with credits, decrease with debits. So if my owner makes an investment, I would put that in my credit side because it's growing. If my owner ever took any money out as a withdrawal, that would be recorded as a debit. So just kind of look at this chart for a minute. Make sure you get what a T is. Debits on the left, credits on the right. Depending on what kind of account it is, it either grows with debits or grows with credits. This next slide I kind of hesitate to show because it's just so busy and crazy all over the place. But this shows our assets increasing with debits, so our normal balance is a debit, decreasing with credits. Liabilities, just the opposite. They increase with credits, decrease with debits, so our normal balance is a credit. And then our owner's capital increases with credits, decreases with debits. And here are our vocabulary words. You should already have those on your vocabulary sheet. Now let's go ahead and go on to Applia. If you need to pause this video while you log on, that's fine. But get onto Applia and open Work Together 2-1. As we read our instructions, it tells us, here's our chart of accounts. So that was one of our vocabulary words. A chart of accounts is just the list of accounts that a business uses. And chart of accounts can be different between two businesses, just depending on what that business needs and what kind of liabilities it has, what kind of assets it has. The chart of accounts can look different from one business to another. So in this account, or this business, we have 7 different accounts that make up our chart of accounts. It's telling us for each one of these accounts in our chart of accounts to prepare a T account and label the debit and credit sides. So we're going to do just that much. There's already T accounts drawn for us. So we're just going to go ahead and label each of them. Debits on the left, credits on the right. And it just seems kind of like busy work because you have to do the same thing over and over, but it's good for your brain. Debits on the left, credits on the right. No matter what kind of an account it is, it doesn't matter if it's an asset, if it's a liability, if it's an owner's equity, owner's capital, always debits on the left, credits on the right. So that's the first thing that we're going to do. Okay, if we go back and look at our instructions, it tells us label each side of the T account using the following labels: normal balance, increase, and decrease. So let's start with all of these accounts going down the left. We have cash, accounts receivable, which means Christine Kelly owes us some money. We have supplies, and we have prepaid insurance. All of those accounts are assets. And if we look back at our nifty little chart, any asset has a normal debit balance and increases with a debit. So we're going to come back to these assets. We know that our normal balance is on the debit side for cash because it's an asset. So we know that cash is going to increase with debits and decrease with credits. If you want to, it's probably a good idea to open your notebook, draw a little T for cash, and show what we're recording here, just so you have a record of that. Because again, it's a lot of just memorizing and just remembering how accounts increase and decrease. Accounts receivable, also an asset. So we know that it also has a normal balance on the debit side. It's going to increase with debits and decrease with credits. Supplies, also an asset. Exactly the same. Normal balance is always a debit, meaning if we increase our supplies, if we buy some supplies so we have more, we're going to record that as a debit. If we use some supplies, we're going to record that as a credit. Supplies decrease with credits. Prepaid insurance, also an asset. Debit normal balance. Increase with debits. Decrease with credits. Now let's look over at our accounts on the right. We have two accounts payable. Accounts payable mean that we owe Miller Supplies some money and we owe Wayne Office Supplies some money. So these are liabilities. Liabilities are just the opposite of assets. So if we refer to our chart again, liabilities increase with credits, decrease with debits, and always have a credit normal balance. So if we go back, our normal balance is a credit. We're increasing with credits, decreasing with debits. Same with our accounts payable to Wayne Office Supplies. Normal balance is a credit, increase with credits, decrease with debits. And then if we look at our capital, our owner's capital account increases with credits, decreases with debits. Normal balance is a credit because that's the side that increases. Can't spell. Increase with credit, decrease with debit. Okay, if you haven't already in your notes, please make sure you have this information. Just draw some simple T's, label assets, draw your arrows, mark your normal balance for assets, liabilities, and owner's capital. It's really going to help you to have that to refer to as you go through this chapter's assignments. Oh, I'm not even logged on as a student, so I can't check my answers. But go ahead and check your answers. You should have done splendidly and have all green check marks. And then I want you to go back to home. And go ahead and do, oh, let's see, sorry guys. Okay, so we just finished work together 2-1. I want you to go ahead and do the on your own 2-1. Use your notes if you need to help you get things straight. And then I want you to do the 2-1 application problem, which is much, much the same. Just to kind of just show you on this one, they've done the first one, cash. So here's our chart of accounts. Here's all of our different accounts our business uses. They took cash. They classified it, it's an asset, it's something that has value. Its normal balance is a debit. So this is just the V key that they've used to type in the letter V like it's a check mark. It increases with debits, it decreases with credits. So you're going to take the next account on the list, which is accounts receivable to Jens Olafson. You're going to classify it. It's also an asset. And you're going to mark how it increases and decreases. You might want to just at the very start get all of your accounts in there. Just name all of those. You've got to get them in the right order. If you skip any, it's going to mark it wrong. put all your accounts in there and then go across and think about how they increase and decrease. And that's everything for section 2.1. Have fun. See you later. Bye.